Okay, hi there, guys. G'day, Pete. How are you, mate? Hope you're doing well. Welcome to Trade Setup. There's only a few people in here at the moment. Um, yeah, welcome along. Hope you had a good weekend. Um, Anyone that's new, you can just follow us at Twitter in the top left-hand corner. Much appreciated. Top right-hand corner is Facebook, but the bottom right is what you can see on the screen. Just subscribe to us at our YouTube channel. So for anyone that is new, there's a lot of videos there on the YouTube channel, and hopefully this afternoon we'll have something we're going to do just on some presentations, some webinars. So we're going to put those up hopefully this afternoon or get those organized this afternoon. That'll be going through that YouTube channel. So just keep an eye on that for future reference. Hope we're all doing well. Bit of a rough day today. We didn't do too much on Friday night. So we'll talk about that in a minute. Just want to go over the ASX and what we're looking at potentially. Are we getting nervous? Are the bulls just having a bit of a rest? Could we kick on from here? G'day, Paul. Just how we see it playing out at the moment. It's a bit of a mixed bag. I mean, prices are stretched, but there's no reason why it just can't keep going. Whether it takes a breather, has a bit of a pullback, constructive pullback to build higher levels, and then just squeeze out anyone that was trying to short it. We'll go over that in just a minute. Also, the US markets. Um, we'll have a bit of a squiz at those. Haven't changed too much. So Friday night, just got to remember what I wrote down the morning report. I tend to do that over the weekend and forget a bit. But GDP figures come out. I think the numbers come out at 10:30 at night, just before the US market opens. And if you go back and check on the currencies, they all ticked off. Pretty washy. I mean, if anyone trades FX, just be careful over numbers. They will chew you up and spit you out every time. Doesn't matter what the number comes out at. Generally, they'll whip around each side of the market and then pick a direction half an hour later, um, depending on what's happening. So if you look at those charts around 10:30, you see the GDP GDP figure come out in the US, um, better than expected. Now, just doing some reading on that, it's a bit debatable. That figure from a lot of analysts are saying it's higher than what they're expecting, and higher than potentially what it should be. It's not in line with inflation figures that are coming out. Um, it's not in line with a few things. So a lot of them are saying realistically, real world scenario it should be about 1.7 or so, up to 2% rather than 3.2 of what it come out at. So I don't know what exactly, but is that? I mean, I'm not a big understander of what's going on with those macro views. You have to drill down into the numbers, into that figure to see what that data is made up of. And I think you can do that on a few websites now. I'm just trying to think of one. But anyway, if you just Google that, you'll be able to drill down and get some news on it just to see exactly what they're talking about. But if that's the case, maybe the market shouldn't be as bullish as what it could be. But either way, the market took it well. The market started to rally on the back of that. They had some good figures out, good earnings figures out, results out as well. And I think the results on earnings are not as bad as what was expected coming into the earnings so far. I mean, so far so good. They're they're down, but not down as much as what people are probably anticipating. So that's probably why you got this market in the US quite buoyant, where we're not well, we have kicked on. We're not quite following along. And I think a lot of people have seen our market being a bit stretched at this moment. I mean, I'm looking at it. It's been a bit stretched, but I'm biased up. I just wouldn't mind seeing a bit of a pullback just to build that confidence because the more it gets stretched, it's just harder and harder to trade. And there's a lot of stocks there that are looking a bit stretched. People are not willing to jump in until we see a correction. Sometimes you just don't, which is hard to take also. We're So back to the US, when we're talking about that GDP figure, come out better than expected. But if you drill down, it may not be as good as what was shown. Now you could probably see that potentially in the US dollar strength. Remember the US dollar buying into US dollar potentially um, is a safe haven rather than um, interest rates at the moment because the inflation figures over there are not really coming out to warrant another rate rise. And I think um, Fed Reserve are coming out on Thursday night with their rates, and they're expected to keep it around 2.5%. So the way the market reacted, it was quite bullish, but bond yields went down, meaning bonds went up. And generally, when bonds are moving like that, the bond figures, it's more of a safe haven bet into it. Because if they were thinking rates is going up, it's a solid economy over there, they're potentially looking at a higher yield, not a lower yield, if that makes sense. Um, if you're potentially raising rates or going into a rate raising cycle, then the yields should be going up, not down. So basically, Paul very much Discord suggests that we need to be very fussy. Yeah, exactly. And we'll go through, Paul, we'll go through some in a minute. The ones that are running are just sort of continue to edge high, and there's others that will kick off and then just come straight back again. So they're catching people off guard. We got whipped out of two. So Newcrest was along, got whipped out of that by literally, I think, half a cent on our stop level, and then it's back above where we got in now. And Wally, probably the same, ticked off by a few cents where the stop was, just washed out that level and turned around and come back down again. So that was a short. So it's hard going at the moment. I mean, that's just the way the market is. You still got to don't. This is the time not to second guess your stops, not to do this, not to that, because this sort of stuff's going to happen. You're going to get whipped out, and the market's going to turn around and go back in your favour. It's just what happens when the market's not that bullish or is tentative. It's, for lack of a better word, it's bloody irritating, but that's just the way it goes. Let's look at the market. Let's get rid of this. I mean, delete that. There we go, and I'll transition there. So, where do I want to go? I want to go here, and I want to go display. What's everyone else's thoughts on the market? I know it's tough. I know we've been talking about this. Where is it? Indices. God, I finally got it. This is, don't worry about that, that's just Sol. It's not what we want to look at. So the Dow's, it's just a grind. It's a grind into those highs. And the Dow's probably linked more towards what's happening with China and the US now. Nothing's really happening there. We don't expect too much to happen. I wouldn't think. I mean, the news has gone off that and it's gone on to earnings. So pretty much there hasn't been much said about what's happened over in China and between China and the US at the moment. You know, plugging away, trying to work it out. I think there were some headlines over the weekend that China said something about their technology, how everyone's complaining about they're stealing the technology, and they want them to basically stop that. And they were having a bit of complaining about that a bit. So that might have bring a bit of negativity in the market. But basically, we're looking towards earnings in the US at the moment until we get through earnings season, first quarter earnings, then, oh, sorry, third quarter earnings. Then we'll just have to see what happens on that front again. But either way, the market over there is stretched a bit. Let's just look at that. So that's a Dow. Dow, if we go back to weekly, actually, I want to get rid of that, don't I? Charts, just want that one. That's not it. Index. Why isn't that working today? No, I don't really need something just here. Sorry guys, just one tick volume. Not interested in the volume. Right, so with the Dow, that's on the daily and the weekly. You can see it's right up in that level. And in all honesty, you probably would expect. I think the US tend to do it quite a bit. They'll blast through, take out the highs and then turn around and retrace on themselves. It's not that action themselves is not looking too great. If we sort of discount, like we said before, discount the lows, these lows that wash out there, you're more sitting in sort of sitting in a range at the moment. We're at the top end of that range potentially. If you're discounting this washout down there, coming in the Chrissy, I mean, light volume, not many people around. Most people are going out on holidays. We've got winter holidays over here, summer holidays over here. Sorry, winter over there, summer over here. So the market is just tending to be a bit into Christmas a bit light on. So the market could be bullied around a bit easy, especially if there's fear driving the market down. No one's willing to stand in the way. So there's not enough liquidity in the way of that move down. Yeah, people are still going to bail. It just makes it a lot easier for markets to exaggerate a move. So if you sort of discount that, or even, we get a retest of 23, say, for example, up here, rather than push down to 22, the way it's bounced, I'm tending to discount that move a little bit. And when it's a good washout to these previous lows, the way the market's bounced all the way back up there, I'm still expecting something. I don't expect it. You can see the way it's slowly curving. I mean, as we're approaching it, the steepness of that rally is easing off. It's backing off a bit. So you probably expect a few more sell-offs to come into the market just as people start to book some gains, book some profits, see how the earnings go, how that finishes up. We're stretched up here as well. Um, so that's the way I'm viewing the US. I wouldn't be surprised if they wash out that previous high like they did here. So, that was the previous high, washed out there, boom, straight down. We wash it out. Don't expect a big move down, but we could easily wash that out before we go into some sort of corrective mode. And by corrective, I mean more, not just a pullback, but more something like that. More of a correction, controlled correction, and then we start to build up, hold the base, or build a base for our higher lows for a move up. Something that's a bit like that, as opposed to just massive sell-off all the way back down again. So that's what I'll be looking for. See if the market can do that. I could even just pull back to the MAs here, pull back, drop 1,000 points or so, pull back, consolidate, hold this low, say around, was it 25.5 on the Dow, hold that higher low, sit on top of the MAs and go again, and then really drive through that highs. But either way, it's, on the Dow and even in the US, the S&P's closed in all-time highs, I think, on Friday. That's a broader market, and it's stretched up there as well. It's not a time, in my book, to be diving in left, right, and center, because anyone could look at that and go, well, we're stretched into that level. You can see. We'll get on the S&P. Here we go. And the S&P, pretty much identical. You've got up to these highs. You've just washed out those highs, closed above on the week. Look at the day, just ticked above, only by a few points, sorry. Was that high? I think they were up somewhere around 29.40. Where do we get to? Close 39, sorry. The close there was 29. So the market's just closed into new all-time highs on the S&P, but again, looking at that weekly, it's not a time to be overly bullish in the US market, especially when the global economy is struggling a bit. I mean, there's still a fair few issues. So what I'd be looking for, I'm looking for more of a reaction, and then this is where it gets hard. And everyone, we've all been talking about this. We'll look at the ASX in just a second. But markets, if you've been watching this rally the whole time and you've been out, you're thinking it was going to roll over, especially after seeing this move down. You saw that punch down, took out the previous lows at around, was it 25? These lows through here, it took out that with a push down. You expect it to rally another lower high, at least some sort of base building or retest of the lows or build a higher low. Instead of went boom straight back up. So anyone that's being squeezed out of that market on that move down went back into cash or put on a few shorts. If you're shorts, you've been squeezed out. If you're cash, you're sitting there, just you potentially could have been sitting there just watching this market rally day after day, waiting for an opportunity to get in or get long off a pullback. Pullback in the index, look to load up some quality stocks and then go and ride it back up to the highs. Instead, it's ridden up to the highs. So there's going to be a few people that, if you're watching it up here, it's closing at all-time highs, that potentially this week could be looking at it thinking, that's it, I've got to be in. This market could just keep going without me, and get squeezed out of the market if there's a pullback. So there's going to be a few emotions up here. I personally don't. It's the fact that it's just getting ahead of the MAs here. It's getting well away from the MAs. You're into a key high. Always expect the US to wash out that high to push above it before they tend to just drag in a few buys, a few, probably the retail, a few people that look to have been in cash and are missing out, wanting to jump in, that fear of missing out, jumping when it breaks at highs, expecting to go higher, and the market could turn around and retrace on them. And then we'd have to see how it goes. It's very hard to be buying up here in these sort of markets, the way the market, especially the S&P is at the moment, with earnings slightly backing off. Potentially the next round of earnings could be weaker again. You just have to see interest rates going. I mean, if these numbers in the GDP are legit and they're really good, and then we get some inflation again, then we're going to be raising rates. It'd be interesting to see how that goes if that scenario kicks off again. Otherwise, at the moment, I think they're quite happy with rates where they are, which maybe has been factored in already. So yeah, we'll have to see how that goes in the US. Now, our market, um, pretty much the same scenario. Was it last week? We kicked off into the highs. We took out these previous highs at 63.73 and a half. And what did we close at? 85.6. So we're down today, but we closed up there. We've been stretched, the most of the time. Doesn't mean we can't stay stretched up here and just keep going. But the problem is the high low holding this trend up at the moment from way down at 54 is up at around 6100. So there's a lot of room to move in a pullback. Clean out a few of these late buys that got in towards the highs, hold another high low, and then go again. There's no reason why we can't do that. And I think to be constructive, we may have to look at that just to be able to drag in some more buys for this continuation to keep on going, or for the market to continue higher. In saying all that, this is still well within an uptrend, and we're gunning for the probably all-time highs, which are from back in November. What is that? 68.50. So it's just that we do expect. I mean, I guess everyone's expecting some sort of reaction from these highs. Where we are at the moment, and that's purely because of this move down. Now, again, if you discount that a bit and looking at that monthly give or take, if we can just make that a bit, no, it's more on the monthly. You can see this rejection here of these previous lows around 57 thereabouts, and that would come in line quite nicely of around, that level in there. So it did trade through it. It didn't quite finish below it, and it's bounced straight back off. So if that's the case, I mean, there's no reason why that can't be your high lows holding. It has cleaned it out in the thin market again, and notoriously thin market, and they always play games around, when it's a thin market, they can bully, stock prices, index prices, things can get moved. Look at what happened on the currencies, I think, over Christmas. Took a big dive and nosedive and then straight back again. I think it was the Aussie, quite a few anyway, over that Christmas period. Now, if you're discounting that trend has still been, it's up, it's quite solid. If you go down to the weekly, it doesn't look quite as clear. You got that capitulation, a big week to bring it straight back up to that above 56 again, and then the markets, started the year, January, just continued on higher. The daily, again, we're stretched up here. There's no reason why we can't. It's a bit stretched, have a bit of a pullback, constructive, hold 63, for instance, chop around there, and then start to go again, and then tick on through that 64 level. I know it's about 50 points down from here, but there's no reason why we can't just continue this move up here. So this, from the end of last year and start of this year, we've been holding higher lows, but they've been quite shallow pullbacks. Shallow pullback there, shallow pullback there, this sort of leg up here. This is the first time we had some sort of constructive move. When we ticked off to about 62.50, had more of a lower high come in here, pressed down, and only retouched the anchor for this leg up at around 61, and we started heading higher again, holding higher levels here. So this, after you get this sort of constructive move or more of a complex correction, it's not a massively complex correction, it's just really a lower high within that trend up above the anchor. And by the anchor, we mean that anchor is around 61 of this leg up. Let me just mark that. Actually, let me focus in on that leg a bit more. Now, where are we? Yeah, that'll do. All right, so at that stage, this is the market, up, pullback, up. We had this pullback because it was so far away from that anchor. You've had that pullback, the market's chopped around. We've held that lower high. You could probably say that lower high was there as well, just above 62, and then pressed down, back down to that anchor, but didn't finish below it. And then from there, just rallied, took out the previous highs. So a complex correction is basically, if this is your anchor, a complex correction is more something like this. When you do take out the anchor, that's what you consider a complex correction. And this is the leg up. So you've got the market up, complex correction, and then it starts to rebuild. And this is where we always draw this kind of scenario, hold higher lows and goes again, and then starts the new leg up after a complex correction. Now this, even though it's got a lower high, it's not necessarily one. It's just there it just builds like that just to clean out a few buyers. And I think if anyone remembers back then, we were looking at this zones, just watching, okay, a lower high looks like it's coming into play, but it hasn't broken the anchor. This could be just a setup. Oh, what was that word again? I keep forgetting that word. A bit of a fudge, I guess, just to bring in a few sellers and then turn around and squeeze them back out again. And just to put a few more people on the sidelines for this new leg up. So if that's the case, this leg is still well and truly on the march high. We've got probably, this is your first pullback, first decent pullback around 61.75. We're up at say 63.50, give or take. Still 125 points away at the moment. So this market can easily, let me just clean up a few of these levels. We could still easily do the same sort of thing. We pull back. We could still have a bit of a correction like that, still holding that anchor, and then that there, I guess, is going to bring in a bit of nerves because we are right up into these highs from the weekly. Oh, where am I? What am I trying to do? There we go. A bit fuzzy today. Up in these highs around the 63.50. We could easily do that. Do this type of scenario, hold the anchor on the daily, and then turn around and squeeze back out again. Does that make sense, just what we're trying to say? So you do expect reaction up there, and most people at the moment, it's probably, and I've heard that a lot of funds have actually gone to cash, not all cash, but have really lightened up. Now, if you feel like you're getting it wrong, you're not the only one. If you've been in cash for a while, or you've been quite light on it for a while, that's fine. I mean, you're not the only one. This market has just continued to tick on higher, continue to tick higher. And potentially there's a few funds out there that have been caught in cash as well. So it's coming to that point where, okay, what I'd be looking for is if we do, let me just draw this up. It'll probably be better to draw it on a weekly. We've got a few positions. There's only, we're down to 4 or 3 at the moment. Just stopped out of another one, DCG, which was just struggling. Even when we go over our positions at the moment, a lot of them, they look good, but they're just struggling to go in sideways and a bit choppy. They take out the previous day's lows and then kick on again. And there's a bit of chop there. It's just a sign that anyone who's been holding that, and you get the ASX approaching the previous highs, and they're struggling a bit. People don't want to take a chance of giving away that profit. And you're finding a few more people are willing just to, like, I'm just getting out. Anyone new to the stock is not willing to buy into it at the moment. So you've got a bit of a stalemate in a lot of stocks, it seems, at the moment at these levels. Now, who knows what's going to trigger either buying or selling? We'll just have to wait and see. But being light on is not such a bad idea. What I'd be looking for here on the weekly is if we've got that level there, we've just pressed up in that level. What I'd be looking for is, whoops, I want to do that in a different color, is more of a pullback and then start to hold. And this could take a while, but I want to see it start to hold near the highs, especially above 61. I want to see potentially, this is your leg up, potentially 50% or the above 50, or sorry, less than a 50% retracement of this leg up. So I'd rather see it hold around the highs, just below, say 63, 62.50, hold, and then start holding some higher lows. And then that, I think, that kind of structure is going to lead us to a nice little breakout through the previous highs and really start to kick on a bit stronger. I mean, that could take some time to play out. What I ideally wouldn't want to see is a pullback like that, all in one foul swoop, like we got here, and then start to consolidate. Maybe retest that 61, and then, like we've drawn this before, that sort of retracement, and then something up like that. You don't want to see that price action. Whoops. You don't really want to see this type of price action, because to me, that's going to lead to a bigger sell-off for that secondary leg, though. Like we've got that, and that's where, okay, you got a major double top on the weekly, and then you got some serious bearish action coming in. But yeah, we'll see how all that goes. Any questions just on that, guys? But either way, there's the two sort of styles of price action I'll be looking for. If it can hold up here, hold the higher level, that's a nice show of strength. Just below this level, then great. If it kicks on from here, and then we just have to follow it up. And then as it's kicking on, you really have to stick to your guns and look for your prime setups, even though they're very hard to find. If they're hard to find and you've got to be out of the market, just remember, there's nothing to say this thing can't turn around and really have a good sell-off, like we saw, back into December. Right? It may even be down to 57. Who knows? I'm just sort of speculating what's happening. But at the moment, if the setup's not there on your individual shares, you're better off just staying out. but keep even making a list of something that has been, we're going to some sort of basing pattern we're seeing on the weekly charts. So the daily, we're starting to get something to lift on the daily. It was some minor higher lows. It was probably, there is one that is a good example. VTG. And this one we've got, if you can see what I'm talking about here, you've had the market press down. This is on a weekly, don't forget. So this is the price action that I ideally want to see. I don't really want to see something that's been heading like this. On the weekly, we're starting to look, whoops, my mouse. I've just changed my batteries in my mouse. It's still a bit rough. So something like this, although this is, nice continuation pattern, I don't really want to see something that's, we're hovering around that level. We're stretched here. Even though it's an uptrend, I don't want to be buying into something like that. I mean, just think about it. If we're buying something that hasn't had a pullback yet and the market does crash, I think you could potentially get really cleaned up on that, because there'd be a lot of people that have bought it in all these different pullbacks that if the market starts to look really toppy and really shaky, they're going to be the first ones to come out. They're going to be bailing. So people are going to bail on those profitable positions. Something like this is a different scenario. So this is what I'm trying to just build up a list at the moment of stocks that are shown, a nice little pattern. You've got the markets pressed down into a level. Okay, at that stage, doesn't mean anything. We've got the market pop back up, had a pullback. Buyers started stepping in here, popped back up, retested highs, went straight back down. So that secondary move down, retested low, and it started to hold up. So buyers, you can see here, stochastics are oversold, pressing down, a lot of pressure into that market, but it started holding up again, even after a little washout here. The market's holding up. Then we've got this first higher low. Market's pressing up, pressing up, pressing up. So this one here, for me, you can see that volatility has come out too. It started to ease out. So to me, it's soaked up all the selling. All the selling that's been done or that wanted to be done is probably out. So for me, that's a nice one to have on the radar for the potential of this really kicking off. And I think recently the news was quite good. The news flow has been really good. It is, if you go back to the daily, whoops, the daily, it's consolidating up here. And the fact that we're getting the selling pressure coming in, but we're consolidating those highs is a good sign. I just want to see that kick off. I really want to see that. We haven't taken a partial on this one. We're up quite nicely, but I want to see that kick off. But either way, that price action to me is saying a lot better things, and there's potential, especially from that weekly, to really kick off and be one that if we do get through the highs in the ASX, these highs up here, we start to, maybe we consolidate here, or maybe we just bounce straight through. I think it's stocks like that, they're going to be the ones that you're going to want to get into. Because if this market starts tipping over and you're in, I don't think the ones going to get hit are going to get hit too hard. Maybe not at all. They could just sit there and consolidate at those highs or go sideways as the market's getting sold off. When we had this big sell-off through here, back in September, October, we had probably about 4 or 5 stocks, I think, were up on them. They were looking good. They were still looking strong, and they didn't move. They really didn't move too much at all. When the market was going through this big sell-off up until about here, coming into Christmas, we tightened up on a lot of the stops just because, it's better to be prudent and just to safeguard your gains, because if you do get ticked off, then, okay, we're proven wrong. And we did get stopped out, I think, of about 3 out of the 4 or 2 out of the 4 at that stage. But either way, because we picked some quality setups, we weathered this storm quite well. Now, if you're picking the quality setups, like I was saying, we're getting a bit overstretched up here. If you do pick your quality setups, it could mean that if there is a pullback, you could weather that storm. And if not, they could be the ones that could really be leading this leg up on the ASX a lot stronger. Does that make sense? I hope everyone's understanding what I'm trying to get at, but we'll see. We'll see. So I'll be looking for things like VTG, Grange. Ideally, I want to see that kick off. That's a bigger pullback than I thought, and I think either way, that weekly, probably go to the monthly a bit. You can see that starting to kick off. It's probably a bit easy to see here. You can see that weekly is more a weekly play than anything else. I mean, it's looking quite good. So hopefully we can hold this one, and it kicks off and we can just miss, I think by 1 cent, trying to take a partial at 35. I think we got to 34 on this move. What did we get to? We got to 35. Actually, I'll put it just after that, didn't I? So we missed out on the partial there. Still looking, think this one could be okay. You can see the way it's accelerated higher, and then any sort of pullback has been consolidating through here, this acceleration higher, and it is edging lower, but we've got these little pop-ups before we're pulling back, and it's pulling back sort of back to the MAs here. So if this one doesn't kick on soon, look, I may have to just get out, take a break-even trade, or take a slight loss. But either way, that's on the weekly still looking not too bad for me. CDA, that I like the consolidation up here. It's spent a good part of 6 months consolidating around that above and below that $3 level. So if that can kick on, and I think we're very close, we can take out these highs at 330. That one could really, start to have a bit of a run on. And it is holding the MAs through here pretty much a good part of this month, holding those MAs there. So the weekly, although it's not quite as good, it has spent a lot of time consolidating up here. And it weathered the storm of that big pullback in the ASX as well. So it could be something good with Coden. So that's it. That's what we've got. But that's what I'll be looking for. Putting some stocks there, guys. We've got Lawrence kicked off with a few. We've got Gore. Looking still. And we'll go through these. Looking at VTG. I do like VTG. I just want it to start kicking off. And potentially on VTG, a move up through high at, say, 75. Could be a good spot to add because it's looking like it's going. If it can pop up through 75, then potentially a nice place to add. But we'll see. All right, so Guru, get rid of that. What do you got first? Yeah, this one on the daily. Doing that for me. Weekly. To me, the weekly suggesting, okay, it could be running out of momentum up here, and it's just, I'm just guessing. Structure's still holding up quite nicely. Nothing to say it can't keep going. It's into new highs, probably start of the year, what was that? In March, it made new highs, about 105 on Gold Road. There is a bit of heat coming out of this move up here, up at these levels, but it's not really seen in the weekly, and the weekly potentially could still hold. If you're looking at, it's only a very minor level, and you can see on the weekly, the anchor to this leg up is down at 84 cents. This little pop down, red candle, and it took off, made new highs. So it's still continuing. So for me, that anchor's there at 84. So if we go to the daily, that's the low. That's the low there. I'll get rid of that. I don't want to show you that. That's all we need to see. All right, so this is Gore. So this is your anchor on your weekly, which is still holding up above, and the market can do all this type of thing. You can chuck around lower highs, keep holding lower highs as long as it's above that anchor. We might come down and retest 87.5, wash it out, and then bounce. But ideally, what you'd be looking for, which it hasn't played out just yet, even on the daily, is a higher low. We got this type of price action. It is looking like it's contracting. You can see with higher lows and lower highs, but until we get some sort of breakout through a lower high, if we can draw that up, this is the move we're looking at. So that's the pop up there. And we've got up, pull back, or about here. If we can maybe get something like that, take it through the high there, off a higher low, then to me that's just showing that the bulls are starting to take charge. Okay, as soon as you get a push through a higher low, and I wouldn't really like to take this high low at the moment. I want to see a bit more. Sort of this minor. Sorry, what am I talking about? This lower high at around 96, which is here. I wouldn't just take a breakout through there and buy there because my stop would have to be down around 80, say 87.5. And to me, that's percentage-wise probably a little bit too big. So I'd ideally like to see another, little minor pullback, high low build, and then really reduce your risk. And I think that's enough contraction off a third high low, something like just in here to really warrant more buyers coming into market and pressing that market higher. And then you can really minimize your risk. But I think all up, we're holding above a weekly a week. Actually, that's the daily as well. That's your daily and probably a weekly anchor level, both at the same level, around 84. So for me, that's showing some really good signs. And this could be one, like we were saying before, a good quality setup. If things start to turning a bit sour on the ASX, or if it starts kicking on through the highs and doesn't really have that consolidation below, that pullback and then consolidation like we're talking about in the ASX, then this one could be a nice one to go for. Then again, it could be just see what gold does. So that's Gore. What were the others? ARB. The daily's looking okay. Don't like this kind of move. This is more, it's a V shape like anything else we've got. The good thing is it has just banged off. It's more that weekly. I'm not so confident in this one. I don't like it as much. You've got this zone through here, which is touched on 1450. You got sort of leg up there, couldn't get through those highs, had to have a deeper correction, and then started holding high lows, and we got this new leg up. So you can see all that. Then boom, straight back down, retested this support zone again, and then we're starting to lift. So we've just got a high low on the weekly. You can call this a minor one. I wouldn't really say that's one. I would really call this one a high low, and we're sort of at that crux at the moment around 1850 where, okay, we could pull back. I would ideally like to see something like this. It struggle around 1850, have a deeper correction, something like this, but above 1450, a deeper correction, consolidate. So we've, something like this, if we can draw that up, retest there, deeper correction, and then start to get some inside levels which we can work from. And I think what that will do is just wash out a few buyers, late buyers into this move up off 1450, clean them out, deeper pullback, build your weekly high low that we can work from, and then see if we can kick on from there. So at the moment, I'm not as keen. I mean, probably from the weekly charts, I don't think the weekly's sitting on the top of the MAs here. This could be a minor double top that we're working against, and this is a double bottom. Don't forget, major support zone through 1450. It's reacted off. Hasn't been confirmed. I'd rather see a push down, a failed push down off a higher low, and then see if it can rally on some volume. And the daily, I mean, that daily there, not too convincing. It's really gradual move up. I think there could be better stuff out there at the moment. ARB, TGR. TGR, was that weekly? I mean, that weekly trend. God, look at this mess. This mess through here. It was right back from 2015. Push up, completely drop. Had another go at the highs back up here. Then we had to have it deeper. So it's just struggling up towards that $5, about where it is now. So just from what's happened in the past, doesn't leave me too convinced. But I do like one good thing working in its favor now is basically a really good high low that built. You can see just in here, this high low, not really great volume. Stochastics were in line. It did pretty well here. That spent, rather than what we've seen before, this high low, this high low, this is probably not so good. But anything like that is more of a V-shape high low, whereas this spent a bit of time over the period of a few weeks, pop up, retest that. We've got this little retest you can see at $4 before it started holding some high lows again on the trend up, potentially this one. The weekly chart, again, I mean, probably just my nervous Nellies at the moment, the way the market is. Buying it up here. We're up at a key resistance zone up here. I know we have pushed through, we're consolidating through here. There was a bit of a washout down to 450, a flush out. What was that, a few weeks ago? Somewhere, was it about February? March. Bit of a flush out here of this high low, but it's still holding up here. The problem is for me that the volume's easing as we're getting higher. I don't really like to see that. I'd be struggling to think there's going to be some good continuation, especially after the length of this move up off, key level around 350. So if this is ranging, if it's more of a range trade, wouldn't touch it. So it's really just asking yourself, are we going to be ranging here? Are we going to be struggling up here? For me, we're starting to get a bit, maybe these stochastics are struggling up here. We're lacking the buying emphasis to get us kicking on through. We'll have to wait and see. The daily, I don't like this candle here, to be honest. I'd rather see it pop up through 510, pull back to the MAs, and buying that pullback as we're starting to rally on again and kicking off. Yeah, it's probably about right, Lauren. G'day, Shirley. How are you? Now, what was the next one we're looking at? VTG, TG, AIA. This was Bitwise's favorite, wasn't it? Let's just go best fit weekly. This has been pretty good, and it is. It's pretty much been trending up for the good part of the start of 2018 when it's. We've got these, and this is a beautiful, beautiful chart, really. If you're looking at weekly trends, so this is everything we really would like to see. You get markets pressed up, pullback, failed up here, lower high, had to get a secondary move down, which took out the previous lows. Okay, and then we started holding them. We pressed up after this secondary move down, pressed up, held at 575, and then started to lift from there. And it's been trending up since, what was that? Start of 2019, been trending higher. Don't particularly like this rejection up here. And the way you could go into the daily to see it, maybe it's a bit of a reversion to the mean. You can see these moves up before we had a pullback and not getting too ahead of themselves above the MAs. The MAs are coming apart. You can see the gap between them as it's starting to extend. As the trend is well established now, it's the move up is getting. It's the first real failure we've seen up here, and a couple of weeks down as well, as opposed to just 1 or 2 weeks. This was a bit different because we're not into new highs when we pulled back here. We're still struggling with this resistance zones. Whereas here we've just popped into new highs above, what was it, at 750, and the market just getting a bit tentative up here. So for me, I would rather see, we've rejected up here. I'd rather see something like this before I'm a bit more contraction. Now we're breaking out. You've got your high low to work for, which is minimizing your risk, and then see how we go from there. Back to the daily. If I'm going to go long, don't want to see it break 740, and I want to be working off a high low, even if it's a little pop up to 770, pull back to 750, 760, build to high low, and then go from there. And that for me, I'd want to see it kick on, not really find any pressure at $8. I want to see it kick through $8. So for me, I'd be waiting and watching this one. I've got my eye on it. You can see this volume is not picking up. A bit of selling volume here. Don't like that selling volume that come through. That was back in March. So yeah, I'll just be watching this one and waiting because I think this trend is well and truly established. Is back to the MAs, but you can see I'd rather see it bouncing off the MAs, bouncing rather than a pullback and getting through the 50. So rather see it pop up, bounce around, hold above the MAs again, and then start to build. Can. Yeah, I'll be honest, not a big fan of this one at the moment. I know the old cannabis stocks are doing well in the US, aren't they? But not so fancy over here at the moment. So to me, on the weekly, there's no reason to be buying this one at all. If you're holding, yeah. And the reason why I don't like this, it needs to be more constructive. I'm not willing to throw my money. I mean, especially, where is it? Where are you? Here you go. So what I'm saying, you've had a good run up here, and that was really, great acceleration. Boom, pull back, boom to new highs. Then it started falling apart. Got up here, couldn't continue on. You can see that's when we started getting a bit overboard up here as well. Couldn't get up to these highs. Sooner or later, it's going to be some profit taken. Anyone that's in late off, say 250, is going to be the first ones feeling pain. If you bought it way back down at $1, you could give it a bit more room. You probably took a partial. Who knows what you did? But at the moment, potentially that contraction is over. Okay, we're talking about this weekly contraction. We've got this mark, this press down here has really cleaned out a few of the buys. Okay, we've got to press right back down to $1.50. Who's to know? And this is where I like drawing, resistance along there. Lower highs are holding until we break up and through. Once we break up and through, the next question is, okay, we're probably coming out of contraction, But are we going to expansion? You've got to ask yourself that. You want to get a market which is going from contraction into expansion, not in the consolidation that's going to range trade for the next couple of years. And by range trade, I mean if we're looking at back down to the daily, stuck, being capped at around 250 and down somewhere around $1.60, $1.70 potentially. And at the moment, we haven't, off the weekly chart, we haven't quite proven that to me. And I don't like the fact that, we got this candle, green candle, straight through the highs, previous highs, bang, straight back down over the next few days. If that, for me, was a strong market, it should have really kept going. So I'd rather, it's a tough one too, because, let's see what else we've got here. It's a tough one because on the daily, we have that big flush out of the previous low, and then we got boom, straight back up. So maybe that's news based. Maybe they come out with some good news, and okay, you could probably rightfully expect it to continue on. But the way this is going up is not leaving me too confident, because these things could easily, we've washed out this previous level at 250, back off. We could fail from here and completely blow down, 230, take out 230, and really trend all the way back down to $1.70, because that's not too strong, especially after this move. It is ticking higher, but it doesn't look like it's got that conviction. As opposed to going bang. You want to see a market that trends up quite and then chops around near the highs, which probably is doing. But I would have thought once we get through 250 here, it would have kicked on with it. So yeah, I mean, I'm saying all that, you can potentially, if you're going to enter through 260, your risk is around 230, and see what happens from there. Because the weekly, like I said, this weekly potentially breaking out of contraction, but on a weekly, that rejection there doesn't lead me to. I'm thinking after this candle, something's going to roll over, and I want to see a higher low on my weekly, potentially a test of $2, flush of $2, build a higher low, and then potentially look down to your dailies for those entries. It is a bit stretched up here on the weekly, so you got to ask yourself, if you're wanting it to kick on, how many more people on the sidelines willing to come in, especially when this ASX is, there's not, it's stretched where we are in the ASX. Market's a bit negative. You've got global growth struggling. So all these sorts of factors are going to keep out people, rightly or wrongly. They will keep people out of the market. And you couple that with this type of price action when it's stretched. The bulls are giving a good nudge, getting from oversold to overbought up at 75 on stochastics, but it hasn't really taken out. It has taken out 250, but it didn't hold up above there and finish above there. So I'd be a bit tentative on this one. Ideally on the weekly, I'd be looking at the weekly, look at a pullback, holding a higher low, looking to consolidate that higher low, and then going. And then potentially, I think that could lead to another good, a really good move up. So for me, it's about the weekly on that chart there. What else we got? We've got Shirley. What do you have here? Amazon. Let's have a look. OTW. OTW. What do we got there? Actually looking good. Weeklies. That weekly is looking quite good. I mean, obviously you're going to come up to some resistance up around that highs of 545, 550, but it's holding high lows. So maybe this is the chart you should be looking at. You want, there's some great examples of ideally what you'd be looking for. Just want to see what's going on here. Some good volume picked up through here. No volume, not much volume through here. Okay. So onto that weekly. We've got this sort of contraction up, pennant, flag, don't know what you call it, but something like that. So you're really looking for evidence that this overall trend up is going to continue. Probably, look, potentially it will. It's looking quite strong, looking quite good. But ideally, I'd want to see like this sitting on the MAs. You can see this price action sitting on the MAs. We're just getting through it. This move pushed down a bit deeper than what I would have wanted to see, which is fine. It just means that probably this is the price action we're looking at, a bit more of a constructive pullback within this flag pennant or whatever you're thinking. So if we can get a bit more contraction, as in that's our pop up here, a bit more contraction, on the weekly and hold, and then working off a high low and looking for a breakthrough a high low. Sorry, I keep saying that high low, lower high. So a bit more contraction in here, and then you're working off. You got a nice high low. You got a smaller risk, and then because if you're going to trade this one, not say just off purely the weekly, you're looking for a breakthrough 550 with your stop way down. Technically, if you want to trade off, be proven wrong from your analysis, that's the way you'd ideally like to be trading at. And for me, that's quite a big stop. If you go down to your daily, let's just have a look. Yeah, I think we're getting a bit stretched up here as well. So for me, I think it's more of that weekly chart. Just keep an eye on that weekly chart for a bit more contraction and see if we can just minimize our risk with high lows, really squeeze in on itself between buyers and sellers. And then the selling that's come in, just run out. And then you take out the lower high, know where your risk is, and then see how it can go from there. But nice. I think that weekly is looking really good, solid. What do they do over the wire? All right. What else we got, guys? Now we've got some US stuff. Can I today? Very thin. It is probably. It's traded 400 grand. It's not a lot on the offer. Actually, the problem is it's not a lot on the bid as well. If anyone can see, if you do get a chance to look at market depth, this is Spark, by the way. I know Lawrence been having a bit of a trial of Spark. Spark's great because it shows you, with histograms where the volume is, and you can see this is where the market is at the moment. What are we trading? 517. The bid's 5. That's on the bid there. Whoop, just here. That's 517. But then it's kind of thin until it gets to 510. So I wouldn't ideally want to be buying that. This is a bit of a fake bid. It's been loaded trying to push the market up. And then someone whacks it down, gets through or chomps through that bid there, and then there's not much behind that. If you're looking to make sure you got your stops, you'd rather see some good volume stacked up behind it. If you're looking to buy, buy when the market's heading higher, you want to be supported with some really good volume behind you. And a lot of the big blue chips, fine, there's volume anyway. But some of these mid to low caps, you've got to be careful of the thinner volume. All right, so let's just get on to CGC, US stuff. Let's just get over here. Blah, blah, blah. It's not coming through, is it? Costa Canopy Group, is it? Canopy Group, 49. That's about it. Oh, God. There we go. So this is on the daily, and that's actually quite nice. That looks like it can easily power through the highs at 51.10. So what's Shirley, 50, 51? Isn't that probably that high? $50, 51. Okay, stop loss 236, so somewhere around. Okay, about here. So it's just the daily candles you work off. Starting to get the hang of it now. Target of 63.87, which is a good, healthy target, isn't it? So for me, I'm just guessing that she's working out a target something like this, maybe. All right, potentially. Okay. So either way, I think that's quite good. I do like the way that's kicked up, consolidated through here. A few washouts to the low and starting to lift again. For me, I'm always after those lower highs to come into play. You've got that there. You sort of got that price action. Get out. All right. So you can see that the market's really powered on higher. That contraction's really flushed out a few of these late buys, but held the highs. It held the top third, probably top third to half of this leg up, which is great over a good period of time, say 3 months. And now it's starting to power on. So if you got that leg up, volatility expansion up towards about 67, nice healthy go. You got that trade there. Good one, Shirley. It's nice. Cough. If that's not what you're looking at, it's worth having a look at it. Where's cough? 94. stopped around 90.34 on the daily candle. Price target 103. This for me doesn't. It's just my bias. Doesn't quite look as good as what I mean. Probably had some good news out. Was that Friday? Quite good, but I think we're going to come up to some about that $100 mark, 150. Sorry, $100.50. It's probably going to provide some sort of resistance up here. Just have to wait and see how that goes. I think that's your first port of call to be concerned of. I don't like to buy into these stretch markets anyway, but I think that's, I can see what you're doing here. The market's pressed down, flushed out some people end of the year, flushed out these lows at 76, which is back from here, which is not a bad sign either. And then we're starting to rally, holding high lows, so it's got all the qualities that you want to see, high lows. We'll just see if they can really push onto that $100 mark. Pennant and a flag, Helen champ. Now, what else have we got? Paul, CSR. Oh, I just forget about that. All right. What's CSR doing? Yeah, that was belted and it's flushed out a lot down here, hasn't it? Got down to that 250. Is that one we were talking about before? It's 7th of Feb at 308. The next div, CSR, that is. I wonder what the div is. Do you know what the div is going to be? You know the div is going to be on, well, expected to be on CSR. Where is it? Oh, okay. Thanks, mate. All right. Either way, it's come off that 250, 260 zone. You can see the previous lows down here. That big sell-off. So that's cleaned out a lot of people. So we'll see what else we're showing. Monthly, not too flash hot. So I'd be getting a little bit concerned that this could be, that press down here. It's grounded back up to the MAs, press down. The weekly, I wouldn't trade it. I think we end a bit stretched up here, but that daily is, that's looking fine. It's still holding high levels. If you've got your stop below that 330 level, where'd you get in? 308, then you're sitting on a profit. There's nothing to worry about there. If that's what you got. BLD, I don't like just yet. I think it's got some work to do for me. Yeah, good work, 495. So for me, it's a big push down here. There's some volume coming in here. It's down at some key levels at 450 zone. You can see touched back in right 2014. Above there, end of 2015. Again, sort of down towards that level before we took off. Trade up to above $8. Come crashing back down. December. Problem with this one, the market's bounced through January, and this one's still heading south. So I'd be more concerned on this. I'd ideally like to see it take out highs at 506. I mean, it's very close now, about 10, 15 cents away at the moment. But ideally, I'd like to see those, which is this one here. I'd like to see that taken out. I want to see that pop up through this previous, because that's the anchor to that downtrend, and then see if we can pull back, build a higher low, and then go from there. Good. So we'll see how this goes. This one could easily just pop up, and it's in the bargain basement down here. BLD. So that's it there, guys. I think we've got through most of it. I might have to call it a day there. See what we got going all right. Not much happening here. That's good. That was rubbish anyway. Oh, good. All right. Good work, Paul. All right, guys. Thanks very much for joining me. We'll call it a day. We'll be back in on next Monday at 12:30 again, and we'll just go from there. We'll see how the market goes over the following week. We're down 31, so still drifting lower. on the ASX, which you kind of expect after that little pop up last, what was it, end of last week, mid to end of last week. Those couple of days had a good couple of solid days there. Expect a bit of a pullback, so I'll be watching a few days, and don't forget some healthy numbers coming out. You got US coming out with interest rates later on the week, so it'll be interesting to see what the Fed Reserve say. I think it's Thursday night. So what I didn't like, if anyone sees, what was it, the SPY. So the market ticked off on Friday night. SPY actually went sideways, so it was sort of setting up. It just wasn't confident to continue on Friday night, whereas the US kicked on, Europe was okay, but we pretty much closed and went sideways. So it wasn't, actually I could probably show you. Let me just get up the chart. Sorry to extend it a bit. Just want to show you what I'm talking about. Yeah, so this was the action. I think this was the open Friday day session, and it popped back up with 63.53, went sideways for the day, and then into the night went sideways and was really struggling there. So this for me, if the US is going up and we're going sideways, it's not a good sign for the next day. Or for today it was, and you can see that with the market heading down 30 points today. We really should have expected a flat open, and I think it did open slightly down, and then it's continued to be sold off during the session today. So it looks like maybe we're due for a bit of a pullback on this move up from the ASX, but look, we'll just see how all that goes. So just keep an eye on it, guys. We'll see what the coming days bring us and see where we stand next Monday. But have a great weekend and the rest of the week, and stay safe. Cheers, guys. We'll speak to you then. Bye.